Hey, this is my open and bell tick strategy that I like to use. What I'm looking for is the tick versus the price and divergence. What is the tick? The tick is just buying and selling pressure, and when you have these levels between over and above 600, that's considered extreme buying and selling pressure. So above 600 is extreme buying, above or below 600 it's selling. And what I'm looking for is when the market opens, particularly this is opening bell trade strategy, is if the market opens strong on a pop or a pop, I'm looking to see if there's any divergence between that pop and this tick. For example, in this case, this is the 2-minute chart over here, and this is the 5-minute tick chart. But you can see right here, the market opened, dropped down in the morning. These ticks were severely negative in the thousands. It immediately recovered and went up to this 50 SMA on the 2-minute and got rejected. Meanwhile, the ticks were still severely negative despite this pop right here. So that's telling me that this pop right here is not sustainable, so I'm looking to go short here. In this particular case, once I saw this candle form, I'd put a short in right here, my stop loss right there. I'll give it a little wiggle room. That way, in case it doesn't work out, I get stopped out and no big deal. So in this particular case, I put in here and I just watch it drop, and I'll get out when I can. This is a quick trade. It's not meant to be holding for 5-10 minutes. It's just 30 seconds to a minute max. I'm looking for that quick rejection and push down, because sometimes it'll reverse and go the other way. But sometimes when these cases are really extreme like that, they last for several minutes. So this day right here, I would have looked for this, took that quick drop, and got out. So in general, if you use the ticks are weak and the price pops, it's a short opportunity. If ticks are strong and the price drops, it's a buy opportunity. I just want to go over one more example. This example right here. So I have the 2-minute tick chart right here, and I have the 2-minute ES up. I use this primarily on the ES because the tick works well with the ES, and I do trade futures. So this is the morning open right here. We can see this big pop up. However, what were the ticks doing? The ticks were severely negative, almost well below 1,000. That's severe selling pressure, but yet the price went up. So what I'm looking for here is, once I saw the rejection on the first candle and then the second candle, that's telling me, you know what, this pop is not sustainable, because these ticks remained well below, in this 600 in this case. That's telling me I want to short this. So what I'm looking for is, I'd like to short anywhere in this range right here. Put my stop loss up here, give it a little room based on your risk strategy, 4 to 5 points or less or more, whatever you feel comfortable. I'm looking for that quick rejection and drop down. In this case, my first target might have been the 21 EMA here, and maybe let a couple of contracts ride. But in any case, when you see this pop in price and divergence in the ticks, that's the opening bell trade for me. Keep an eye out. It's a quick trade. It's very helpful, and you can actually use the ticks throughout the day if you're trading support and resistance, and you break resistance or support and these ticks go negative or positive. You'll see that kind of secondary confirmation that selling is strong or weak. I'll post a link in the below, more details on the tick. Feel free to check it out, post some comments, and if you have any questions, let me know.